Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 4th of October 2023 and here are the questions we will be answering today. Why are Indians on a car buying spree? Is China's authoritarianism hurting its economy? How are traditional brokerages fighting back? And what is the R21 Matrix M malaria vaccine? With SUVs leading the charge, car sales in India smashed yet another monthly record in September. Quarterly numbers too have surpassed the previous best. Over 10,76,000 personal vehicles were sold in the second quarter of the ongoing financial year. Clearly, it looks like Indians are on a car buying spree. But why? Tariq Ahmed has the answer.
Festivals are a harbinger of good days for India Inc. too. Sales of smartphones, cars, and white goods have shot up in September, a month which ushers in festivities. Thanks to improved demand and a raft of new models, especially that of swanky SUVs, car makers reported record monthly dispatches. Vehicle dispatches hit a new record at 3,63,733 units in September. Sequentially, it was a 1.2% jump and an impressive 15% jump when compared to the same period last year. As key festivals like Dhanteras, Dussehra, and Diwali are drawing close, car makers have replenished dealer stocks in hope of a good demand. They have announced 81 new launches during the ongoing financial year to pamper the consumers. Coming back to September sales, India's biggest car manufacturer, Maruti Suzuki, saw 1.64% jump in their sales, and India's second biggest car manufacturer, Hyundai's sales were up by 9.48%. Mahindra & Mahindra, who have 9 SUV car portfolios, had increased sales of 19.59%. Other manufacturers like Toyota Kirloskar and MG Motor saw an impressive increase of 53.4% and 31.38%. The only exception to this trend is Tata Motors, whose sales went down by 5.32%. So why are Indians on a car buying spree?
We were 100% locked in, going nowhere, and now everybody is out to generate his income or his work or practice his tools of trade. So people need more cars. Okay. So that is the reason, number one. The reason number two is also during the COVID period, the production was impacted due to supply chain disruption as well as semiconductor shortage. Okay. So therefore, there were less cars for people who wanted to buy. People who had a car anyway are now upgrading their car. Some people are migrating from using public transport or shared cabs to owning the car. More nuclear families are getting created as more people come into the workforce. Now, I'm not talking about job creation here. I'm talking about the well-to-do people who get a job, right? So there are new people coming in the job market, so they also need the cars.
Experts pointed out a major trend in car sales. SUVs have been gaining ground, and that is apparent this year too. September surge was led by SUVs, which now command about 52% of all PV volumes.
OEMs have tried to tweak their portfolio from hatchbacks to SUVs. And as a result of this, SUVs are the hottest. In today, you will find a SUV in every segment. It may be entry segment, it may be compact segment, it may be subcompact segment, it may be mid-size segment, it may be full-size segment. So all that is, leading consumers to move away from traditional hatchback and sedan segments to SUV segment, so which is obviously great, because today the consumer is relatively pretty young, right? So they really want to go on the weekends. They really want to enjoy the power in the car. And also parallelly, as I said, it's a status symbol, in India.
In SUVs, there are genuine SUVs which are called true blue SUVs, which means they have all the rugged features of off-roading. But what India seems to be going for is soft-roader SUV-like vehicles, or SUV looking like vehicles, right? Which look like SUVs. So SUV growth has been amazing. Almost 1 out of 2 cars selling is SUV.
The second major trend is the increased sales of luxury cars. The first 7 months of 2023 saw an increase of 19.3% in luxury car sales when compared to the same period last year. Except Jaguar, all the major luxury car brands like Audi, Mercedes, Land Rover, etc. saw an increase in their sales. Experts are hopeful that the trend will continue. The August to November period traditionally drives better car sales. So automakers are indeed hoping for a good time ahead. And so is the government, as increased sales will lead to good GST collection too.
This record car sales also points towards India's impressive economic growth. But it seems the economic juggernaut of neighboring China is slowing down. Several key markers attest to it. And amid the sluggish recovery of its economy from stringent pandemic lockdowns, China is also involved in some sort of trade war with the West. And China recently barred a Nomura banker from leaving the country. This move raised a lot of questions about the business environment there. So, is authoritarianism the cause of China's economic woes? Debargya Sanyal and Ayush Mishra find out. The chair of investment banking for China at the Hong Kong arm of Nomura Holdings Inc., Charles Wang Songge, has been barred from leaving China in relation to a long-running investigation of a top dealmaker in the country. Wang overlapped with Kong Lin, a former executive at China Renaissance Holdings Limited, while at China's Industrial and Commercial Bank, or ICBC. Lin was summoned by regulators a year ago and has since been detained. In 2017, Lin joined China Renaissance, a local investment bank founded by Bao Fan, after leaving ICBC. He played an important role in a strategic partnership between the firms. Since early this year, Bao too has been detained. Over the past few years, President Xi Jinping has cracked down on broad swaths of the private sector. That's not all. In 2023, China expanded its anti-espionage law, broadening its scope from state secrets to encompass anything related to national security. This includes documents, data, or materials. New surveillance powers grant access to people's emails and social media, thereby impacting China's investment climate significantly.
The kind of political situation we find today is worsening what are really certain very structural challenges which the Chinese economy faces. It has for a number of years followed a strategy of investment and export-led growth. And it has not really made the transition towards a more consumption-led growth. And this has really resulted in the kind of slowdown which you see in the Chinese economy. And of course, this has been exacerbated by the fact that you have a political dispensation today which is very nervous about what it calls regime security. There is now a kind of an upsurge of more ultra-nationalist, more xenophobic kind of a attitude. So this has had a very dampening effect on foreign investment into China.
China's economy is not at its healthiest. The one-child policy had demographic consequences. Its population is aging rapidly and could strain its social welfare systems and labor force. In 2019, China's property loans peaked at 30% of banks' portfolios. By mid-2023, it decreased to 23%, indicating potential efforts to stabilize the property market. With 70% of Chinese household wealth invested in real estate, the recent downturn in the housing market is affecting the broader economy. Existing home prices in prominent urban areas of China plunged between 15 and 25% since late 2021, according to reports. China's factory activity in September recorded its first expansion in 6 months, according to the government Statistics Bureau, but it's still far from pre-pandemic growth levels. Global investors also pulled out $10 billion from Chinese stock markets in recent months.
China's growth is interesting in the sense that its society and its economy and polity have not all proceeded in a very harmonious manner. So as a result, China's example is a country which has grown old before it has grown rich. Its one-child policy, as you mentioned, has led to a demographic lineup which is severely disadvantageous. Secondly, what it has also led is that despite a fair amount of automation, and despite the fact that China has really ramped up its skill levels, it has perhaps one of the best skill sets in the world today, it is actually facing increasing labor costs across the spectrum. And this is leading to a problem with the economy.
Economic apprehensions are compounded by the suppression move of the state on alleged corruptions that started in late 2021. The abrupt absence of a senior executive has become a signal of a state crackdown or investigation. Listed companies reportedly lose contact with certain executives and need to make their own inquiries into what happened within the country's opaque legal system. The disappearance of Bao Fan, a former Morgan Stanley and Credit Suisse banker, had hurt the sentiment of tech and investment sectors that suffered a prolonged crackdown by the authorities.
So on the demand side, because it is facing declining global demand for its products and its manufacture, it'll have to find at least A, value addition in its products that it sells overseas, and B, it'll have to definitely stimulate its domestic demand function. On the supply side, I would say that there has always been a big problem with Chinese data and the unreliability of Chinese data. So I think they will have to recognize and reconcile this data. And so they will probably have to bring in new asset management companies.
Over the years, China has relied on investment and export-driven growth rather than emphasizing consumption. This approach hit the country hard during and after the COVID-19 pandemic. In this backdrop, continued authoritarian stance and actions against multinational companies will erode business sentiment, impairing direct investment that contributes to China's growth. Back home, the retail frenzy in the Indian stock market is at its peak thanks to mushrooming of discount broking industry. These brokers, who provide only trading services to clients, are cheaper when compared to the traditional brick and mortar brokers. As the discount brokers chip away traditional brokers' client base, how are the old guards planning to fight back? And what are the challenges they may face? Nikita Vashisht and Puneet Wadhwa take a deep dive.
India's equity cult is growing like never before. There are nearly 127 million dematerialized accounts in India, with around 80 million unique investors or 17% households directly investing in the Indian stock market on the National Stock Exchange, a first for the Indian markets. A large part of these clients, however, have been cornered by discount brokers that provide only a trading platform to investors at a flat fee of 10 to 20 rupees per order. A traditional broker, on the other hand, charges brokerage as a percent of the value traded, which ranges from 0.2% to 0.5%. So, is it the end of the road for traditional or full-service brokers?
The discount broking has kind of picked up in the last few years, and the traditional brokers have seen a decline in their market share in the last few years. The main advantages that we see for the traditional brokers by launching their discount broking portal is of retention of their customers who have seen an exodus to the discount brokers because of pricing. Also, the second advantage is of acquisition, where they would also be considered as a choice by the new gen users who, because of the cost disadvantage, were not considering the traditional brokers for their trading requirements. But now they will also be competitive and they will also be a part of choice for the new customers as well.
At present, Zerodha has 6.32 million active investors, while Grow has 5.99 million. By comparison, Angel One's active client base stands at 4.55 million, while ICICI Securities has 2 million active clients. Experts believe traditional brokers are restructuring their business strategies and investing in technology to attract new age customers. They too are unbundling their services to make their offering competitive vis-a-vis discount brokers. HDFC Securities, for instance, recently launched a discount broking all-in-one mobile app, HDFC Sky. That said, is the road ahead easy to embark upon?
The challenges that we see is of cannibalization. Let's say if many of their current existing high-paying customers shift to discount broking, then the traditional brokers can see a heavy decline in their revenue, which can be in the range of 40, 50, 60%.
ICICI Research, meanwhile, believes increased regulatory compliance and associated cost will trigger consolidation in the industry. Moreover, higher compliance expenses could trigger upward revision in the brokerage rates. Experts expect focus on quality customers and better revenue-generating services will help the old guards sustain their earning growth. On October 4, the Reserve Bank of India will begin its 3-day monetary policy meeting.
He's making plans for an early retirement. Business Standard.
After the financial markets, let us turn our gaze to a disease which still claims over 600,000 lives on an average every year across the world. WHO recently recommended a cheap malaria vaccine that can be produced on a massive scale and save a lot of lives. The R21 Matrix M malaria vaccine has been developed by the University of Oxford and the Serum Institute of India.
Malaria has been one of the leading causes of deaths worldwide. While the deaths have come down considerably, it is still a challenge before medical science. From 8,97,000 in 2000, the death toll came down to 5,77,000 in 2015. It was 5,68,000 in 2019. And in 2020, malaria deaths soared by 10% to an estimated 6,25,000. Estimated deaths dipped slightly in 2021 to 6,19,000. While the world is trying hard to bring down the deaths, a piece of good news emerged from the World Health Organization or WHO recently. We have found a second vaccine for malaria. The first vaccine, RTS-S, which was developed by GSK and backed by the WHO, was rolled out almost 2 years ago. After a scientific review by the Strategic Advisory Group of Experts and the Malaria Policy Advisory Group, the WHO recommended use of the R21 Matrix M malaria vaccine. It has set the platform for wider rollout of this vaccine next year. The vaccine was developed by the Jenner Institute at Oxford University and the Serum Institute of India with additional support from the European and Developing Countries Clinical Trials Partnership, Wellcome Trust and the European Investment Bank. The R21 Matrix M malaria vaccine has been licensed for use in 3 West African nations, which are Ghana, Nigeria and Burkina Faso. It is an easily deployable vaccine and can be manufactured at a mass scale with a modest cost, thus helping save and improve the lives of millions of children and their families. The vaccine completed the 1-year endpoint in the Phase 3 clinical trial, which included 4,800 children across Burkina Faso, Kenya, Mali, and Tanzania. The results of the Phase 3 trial are under peer review before publication. The University of Oxford said the vaccine was well tolerated with a good safety profile. The efficacy of the vaccine over 12 months was 75% at sites with high seasonal malaria transmission and 68% at sites with more perennial transmission using standard age-based administration. As there was some waning efficacy over the first year of follow-up at both seasonal and perennial transmission sites, a booster dose restored efficacy at the seasonal sites with a vaccine efficacy over 18 months of 74%. High vaccine-induced antibody titers were observed in children in the age group of 5 to 17 months, compared with 18 to 36-month-olds. The younger age group showed the highest 12-month vaccine efficacy at both seasonal 79% and standard sites 75%. WHO Chief Tedros A. Ghebreyesus said that the vaccine will become available by mid-2024 and the doses would cost between $2 to $4. The Serum Institute has established a production capacity of 100 million doses annually, and the capacity will be doubled over the next 2 years. In 2020, 29 of the 85 malaria endemic countries accounted for 96% of malaria cases. India contributed 1.7% of malaria cases and 1.2% deaths globally.
The nation's trusted bank, SBI, the banker to every Indian.
Meanwhile, Nobel Prize in Medicine has been given to 2 scientists for research that laid the groundwork for the mRNA vaccine against COVID-19. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.